Director Equity Advisory at Spark Private Wealth is now with us. Devang, thanks very much for being with us. Good to have you on the show. So I want to start by getting your sense on financials, because I think this is the most interesting part of the market right now. A, because banks hadn't run up as much in the rally. And B, now we've started getting the quarterly updates. And it seems the going is pretty steady, at least as far as loan growth is concerned. How are you looking at the lenders? And what are your sort of top bets over here? Are you looking at only the blue chip, the big banks, or are you willing to go down to the second rung?
Thanks, Surabhi, for having me on the show. Pleasure to be on CNBC as always. Yes, I think clearly the financials is one part of the market, which is clearly an overweight on the Nifty, and probably markets can't do exceedingly well if this part of the market does not perform. Having said that, I think private banks had a great run earlier. Some of the PSU banks did exceptionally well. The last couple of days, we have also seen certain NBFCs coming to the fore and probably performing very well. And most of the insurance companies and even the smaller NBFCs or the vehicle finance companies have done well. So overall, I think no complaints. The pocket has been a consensus trade generally. Private banks had been a consensus trade. But I think we like a bouquet of stocks over a bouquet of businesses or themes over here. Clearly, the credit growth, which is seemingly rising and on the rise as well, probably around, say, FY4 to FY8, the credit growth that we are getting into that type of a momentum. This is also led by capex as well as discretionary consumption, which seems to be decent, and capex is going to thrive. My sense is that with decent deposit growth, with good credit growth, most of these banks would be a proxy play to play the growth in the economy. So my sense is that the basket of a couple of NBFCs or certain private banks as well as some PSUs, where of course the profitability on lower base would be sort of good, and we are getting into an economic upturn, plus the NPA cycle seems to be on the downturn. So my sense is, yes, financials you can't sort of ignore if you want to play out on the economic strength and even the strategies that people employ. I think this forms a major part of the strategy.
Devang, there have been a spate of provisional banking updates, whether it's from Equitas Small Finance Bank, which is just hitting the screen now. That's up close to about 1%. RBL Bank has rallied 5.5%, 6%. Yes Bank has inched up close to about 6%. On the losing side, Bandhan Bank, there's a CFO resignation there, but Bandhan Bank is down 4% as loan growth at 7% is lower than the company's own guidance of 20%. You've got HDFC Bank, AU Small Finance Bank. Amongst all these, where we've got an initial indication of what Q1 is going to be, which ones have positively surprised you and which ones have negatively surprised you, where there is a risk perhaps of an earnings downgrade?
I think most of the banks that have provided updates have been decent as such, and seasonally I think this quarter also sometimes seem to be a little weak for a lot of such banks. So maybe smaller finance banks which have come up with decent guidance. AU Small Finance Bank was sort of again a decent bit of guidance. A couple of banks could sort of miss it for 1 quarter, but I don't see a major problem for this type of financials on a longer term. And of course, the stock run-up has been great in this company. So my sense is that larger banks, probably companies like HDFC Bank, ICICI Bank, Axis Bank, most of these, except HDFC Bank, some companies are still about to come up with their guidance. I think let's put our eyes on that, and that will give us a clear direction.
Okay. Devang, finally, tell us about anything new that you've kind of spotted in this rally, any new ideas, fresh themes. What's capturing your imagination, so to speak?
I think a couple of themes will be which are very starkly different and sort of are something that would do very well for the next 3-5 years, and which has a bit of shallow cyclicality and not deep cyclicality, is something in the capex space, right? Everybody talks about capital expenditure as such. The government fiscal expenditure is going to sort of do very well because being an election year, I think there'll be a lot of spending which would spur consumption. But capex is one side of the economy which in the last 5-7 years has always had a false start. So I think this time we are seeing a lot of companies going and acquiring companies in the IBC, companies which are SIC units. That's also a bit of capex, right? Brownfield or greenfield expansion we are seeing. So we prefer companies in the cement space. There is building materials. There is home improvement as a theme, which again will come back with a bang. Because what we have seen is the market rally has been clearly broad-based. Large caps have done their bit. But I think the bulk of the earnings in the overall the next 2-3 years would be carried by mid and small caps. So my sense is a lot of broader markets participants, which are sort of market leaders, which have ROE, ROCs, good corporate governance, and the themes which I mentioned would tend to do well.
Okay. Very quickly, Eicher Motors down another 1%, follows the 7% knock that we had yesterday. Buy at current levels or wait for lower levels?
Eicher seems very interesting post this correction, and why I say that because the competition, yes, of course, is increasing. We saw Hero yesterday launching something. Bajaj is going to come up. This is going to expand the is very important according to me, because what will happen is competition, of course, will intensify. But I think the premiumization that is happening in this type of bikes would also enthuse a lot of people to sort of buy this, and people moving up the pyramid, up the curve, will sort of expand the size of the opportunity. And hence, I think Eicher has this ready incumbent advantage which it can carry forward. I think it's a sort of a interesting stock after correction.
Okay. All right, Devang, we'll leave it on that note for today. Thank you very much for joining in. Appreciate you taking out the time. We'll take a